You're listening to the Wealth Mindset Show, where Hixon Zerker Capital Management's team of finance professionals, portfolio managers, and a life coach come together to tackle complex topics in finance and retirement planning so you don't have to. From investment strategies and wealth management to tax planning, retirement income, and aligning your money with your values and purpose, the Wealth Mindset Show offers the tools to thrive.
All right. Hey. Welcome to Wealth Mindset Show, where the Hixon Zerker team has conversations on managing wealth, navigating retirement, making smart decisions for a secure, meaningful future. I'm Austin Wilson, Chief Investment Officer at Hixon Zerker Capital Management.
And I'm Josh Robb, Director of Wealth Management here at Hixon Zerker Capital Management. Joining us today is our founder and
fearless leader,
the CEO, Tony Hixon, here today to talk about a very important topic. But before we get there, a little bit of an update. I know the two of you have spent a little time traveling. Tony, would you like to tell us a little bit about yours?
Yeah, so my wife and I agreed years ago that when our kids graduated high school, we would celebrate and they could choose either a graduation party or a trip. You get the party, you get the money. You choose a trip, you get the memories and the photos and the experience. So my oldest chose the trip. We went to Costa Rica a couple of years ago. And my forgotten middle child just graduated, and she also chose a trip. So we just went to Greece, to a couple islands over there, Santorini, Mykonos, etc., and had a good time. We went on a Royal Caribbean cruise and had a great experience, and she took tons of pictures, and it's a beautiful part of God's creation, and we're really honored and happy to go.
All right, awesome. And Austin,
not as exciting as Greece. I went to Georgia. Northern Georgia. Yeah. My dad and I met my uncle and my cousin from Florida, and we met in the middle, which is about Georgia. And we went for a motorcycle trip for 4 days and had a great time. Great roads, great food, great people. So we do it every year. That was the 8th year in a row. It's pretty amazing. Same 4 dudes, same 4 bikes.
Yeah. And I just traveled from field to ball field.
That's right.
Softball and baseball, and enjoying it, though. We've had.
You went all the way to Toledo and all the way to Tiffin.
I was all over the place. Yeah. So, yeah, it was great. Kids are having fun, good times. Got rained on, but that's normal for this time of year.
Yep.
So today, we're talking about something that everyone, I'm sure, has heard about because it's all over news, social media, it's all over everything, and that is SpaceX.
Oh, I never heard of it.
What is it?
Maybe I'm on the wrong episode.
SpaceX, I believe, is the ticker.
Yeah.
SpaceX finally went public. So SpaceX going public was a really monumental thing. Not only has it crushed a lot of records that we're going to kind of talk a little bit about, but it just it was hotly anticipated. It's another Elon Musk company, and Elon Musk, anything he touches has a lot of a following to it. So what happened? Well, it went public on Friday the 12th. It went public, and what's interesting is that there were 4 times as many people interested in buying it as there was shares available to buy. It was 4 times oversubscribed.
Yep. No, pause real quick. So when you talk about an IPO, let's back up just a tiny bit. So SpaceX is not a new company.
Correct.
It's been there for a while. It's
probably 10 years old.
Run privately. It's been owned by individuals, and there is no shares that you could purchase.
Not publicly, correct.
Yes. And so an IPO is initial public offering, which means that going forward, they are putting shares out on the market, and people can trade them like to do all the other stuff. So it's publicly traded.
Correct.
And so the big news on that is to make that transition, you have to make your initial sell of shares. So you create however many shares you want based on valuation, all that fun stuff. And people buy them.
Yes.
Once they buy them, they can then sell them to others.
It's just like any other stock.
Secondary market starts. So this initial public offering, like you talked about, was in a sense oversold. There was more people that wanted them than were shares available.
And one of the reasons for that is that SpaceX, so one of the big numbers is that it's trading at like $1.5 trillion market cap. Wow, that's freaking huge. I remember we didn't even have $1 trillion company, and now there's like 6.
Yeah, right.
They're one of them, and they're one of them at like a week old.
Yeah, they're the newest.
They were like $1 trillion at the IPO. But what's interesting is that not all of that $1.5 trillion came available for sale, right? Some of the private holders are still holding their SpaceX shares. Elon Musk still being the largest shareholder. The entire company didn't go public.
Yeah.
So not the entire 1.5 trillion was available for the market to digest, which is why there was more demand than there was supply. So actually, I think it went public at like $150 a share. And as of the time of recording this, it had already had jumped up 50% in like 4 trading days.
Yep.
It was pretty incredible move. So, the question that a lot of people are asking is, wow, this is really exciting. It feels like the 60s maybe, right? The space race, all this other stuff. Is this the next great thing, right? And the answer is maybe. I don't know. We're going to talk about some reasons why it might be and why it might not be or why it might not be. But the interesting thing we can talk about is how investors can just look at this situation and say, let's learn about it, because this is obviously new. It's new technology. It's a new company. Let's get our mind around, first of all, we just learned what happened, going public and what all that really means. But we need to talk about what this means for these potential exciting opportunities like this, because guess what? There's a couple other big IPOs coming later this year. That would be OpenAI, so parent company of ChatGPT, and Anthropic, parent company of Claude, some major AI players coming later that may have similar reactions. May not. The market has to digest a lot of that supply when it comes online. So, SpaceX, that's what we're talking about today. So, why are investors so excited? Well, like I said, this company's not new. It's been around for a little while now. This actually is, while Tesla, Elon is the CEO, he's not the founder of Tesla, by the way. He kind of joined a struggling small company. Yeah. He founded SpaceX. Yep. This is Elon Musk's baby, and actually his net worth is now over $1 trillion. I think it's like 1.3 or 1.5 trillion dollars.
Yep.
And that is mostly like highly concentrated between Tesla and SpaceX. His holdings just are enormous in them. And actually, as of now, because we know the valuation of the company at any given moment, his SpaceX holdings are worth more than his Tesla holdings.
Oh, wow.
Yeah. Which is pretty incredible.
Yep.
So why do people like SpaceX? Well, it's just because this company is transformative. It's doing new things that other companies have not done before. One of the things that's super interesting and has always been interesting about SpaceX is they've focused on lowering the cost of space. They've done this through reusable rockets, because think about, for 60, 70 years of going to space, those have been disposable, right? They've crashed to Earth and burn up, and we've been done. We're talking now about reusing rockets.
Yeah. Now the shuttles you could reuse.
Yes.
They would land and they could reuse those. But some
rockets,
of the parts that they used to get up there,
they were gone.
Because the shuttle was attached to the rocket to get out of the atmosphere.
Yep.
Those are actually finding to at least portions of it to reuse.
Yeah, absolutely. So that's new. Another thing is that this company is highly influential with government contracts. And one of those government contracts is for the space program. So space program has a lot of government contracts. Some of the government contracts are for Starlink. So Starlink, if you live in the middle of nowhere, you may need internet, right? Everyone needs internet.
Yep.
And internet is hard to get in some very rural places. SpaceX's product Starlink is a little satellite, goes on your thing, and it's not even that crazy expensive, and you get ridiculously fast internet.
For what it is, because it used to be very slow.
Absolutely.
If you're using something that wasn't hardwired.
So that would be another big thing that the government has contracts with and people can use there. And that's something, those are the things that people are excited about this. So this company already has a lot going for it. It's got a track record of innovation, a track record of execution. But another thing that's interesting is that this company is not just about space. So sure, they do space, and that's really huge. But they're also an artificial intelligence company. XAI, so Twitter AI, that arm, is now merged with SpaceX. Yeah. It's pretty amazing. So that it's an artificial intelligence company. They've got communications through Starlink. They've got defense contractor work through the government. A lot of infrastructure in addition to space. So it's that combination is checking a lot of boxes that are getting people really, really excited about something that's new. So I guess the question you might ask is, what makes this company different than other hotly anticipated IPOs? Well, in this case, space is the differentiator between what's coming public this year and the big three that are coming up. So if you want space exposure, this is really the name of the game. But also you are in the demand theme of AI. So there's a couple things that get people really excited about what's going on here. And ultimately you have to decide, is SpaceX worth the hype? Yeah. And that's something we're going to spend a lot of time talking about, because this IPO has been hyped up for months leading up to it actually going public. And right afterwards, it's continued to be just as hyped. It actually spends more time on CNBC than NVIDIA, I feel like, these days. And that's because it's new and exciting and, that sells. But is it justified? And the answer, Josh, probably you would know best.
Yes, it depends. It really is on what are you trying to accomplish? Because when you ask about, is it justified? the multiple, which is how you value these companies,
Is obscene.
is very high.
Well, and it doesn't generate a profit.
And that's the problem.
Nor does it generate much revenue. Last year,
very
I
small.
think it brought in $18 billion of revenue.
Right.
$4 billion of that was Starlink.
Yeah.
Mm-hmm.
And we got a $1.5 trillion valuation.
Yeah.
And we're burning through money like crazy.
Yeah,
So
not
the
profitable.
big question becomes, what are you actually investing in? You just mentioned a bunch of things it does. You could do a lot of stuff, but if you can't make money doing those things, are you a business?
Yeah.
And that's the big question at this stage is, are they able to adjust that to be profitable?
Like-
Now, that's not new.
No.
I mean, you look at even Amazon and some of those startups, as they're trying to either innovate or create a new space, a lot of times they run a loss for a little while.
Yeah.
So it's not like this is the first time you've seen something like this. The question is, though, are they able to make that transition and justify the price of what future things could hold?
As with really most IPOs at this stage, especially in the technology area, this is very technology focused. Most of these companies aren't yet profitable. That's not uncommon for a company. It is what is uncommon is how big the company is when it went public.
Yes. Yep.
I actually heard the joke that's like, the SpaceX, market cap greater than Meta, revenue less than Macy's, right? Just to put that into perspective,
Yes.
which is an unbelievable way to put it. But you hit a good point, Josh, that you're buying this company today not based on what it does. You're buying this company today based on what it can do.
Future hope.
Yeah, it's future hope. And really, that's what we do with all investing.
Yep.
Because we're not looking necessarily at what a company's doing today. We're trying to say what can it do for the next 1, 2, 3, 5, 10, 20, 30 years to get a value today.
Yeah.
And that's how investing really works. It's all about the future. This is just all baking in some really, really aggressive growth, estimates that have to happen for it to be semi-reasonable, right?
Have you ever felt overwhelmed by the complexities of managing your wealth? You're not alone. At Hixon Zerker Capital Management, we specialize in helping affluent families and individuals navigate the complex challenges of managing their finances. Wealth management is all about combining thoughtful financial planning with active investment management to help you reach your goals. Our process is designed to guide you toward what truly matters because we believe wealth isn't the destination. It's a vehicle for something much more meaningful in your life. Achieving your dreams requires careful planning, smart decision making, and access to high quality investments. That's where we come in. We understand that complex financial situations call for deep expertise in investing, tax strategies, and retirement planning. But our approach goes beyond that. We integrate your financial goals with your core values, helping you visualize the possibilities your wealth can create for a secure future. If you're ready to take the next step, visit hzcapital.com/start to see if we'd fit into your needs and to schedule a call with us. Again, that's hzcapital.com/start. Now let's get back to today's episode.
Another thing that's happening with SpaceX in terms of being public now is FOMO, right? This is a FOMO trade, fear of missing out, FOMO. I don't want to miss it, right? A lot of people are looking at SpaceX and going, oh my goodness, this reminds me of when Amazon, like you mentioned, went public, when NVIDIA went public, when Tesla went public. And what happened since then? Well, those have turned out to be some pretty good investments.
Yep.
They've been volatile as all get out in a lot of ways, especially early on. But since then, oh wow, some great growth.
But I think the valuation at the moment of them going public was a lot more reasonable than
For
this
sure.
one.
Absolutely.
Yes. So it's kind of a apples and oranges type scenario in that Amazon went public. They were a very mature business, profitable at that moment.
And you're looking at, you just listed 4 of them. Those are the ones that succeeded. How many also have gone public
That's right.
and they didn't? So again, that's the thing a lot of people do is they have, winner's bias in that they only look at the ones that did well.
That's right.
Well, there was how many others that had a IPO and then didn't fulfill all the expectations that were set for them. So there's always that fear of missing out. The idea here though is understand what you're investing in and the probability that they'll actually achieve the goals that they're setting or the expectations the market is putting on them.
Absolutely.
I think too, the other major risk to talk about in this scenario is key man risk.
Yes.
Mm-hmm.
So the whole company really depends on the space between Elon Musk's ears, right?
Mhm.
Using his mind to come up with this. If he were to transition out or whatever word you want to substitute in there, this also makes the valuation of that company even more unreasonable
Mhm.
based on amount of key man risk that's going on with Elon himself.
Yeah, absolutely. Probably more than any other
More than
company
any other company
ever,
yeah.
probably. So let's talk about potential upside, the bull case, and then we can talk about potential downside, which would be the bear case. So the bull case. Maybe there are reasons why people are optimistic, right? There could be actual truth to what is so exciting, right? The potential opportunity of the space economy. We don't really know what it is,
Right,
but it
yeah.
could be as
How
big
much
as
money can you make on space?
It could be as big as anything, right? Starlink, though, is continuing to expand globally. It's growing, and that is actually a profitable part of their business. It's just not offsetting the rest of it. Their spaceship launch costs continue to decline. So this is something that's only going to become more profitable over time as well. Governments are increasingly reliant on their satellites. There's potential infrastructure for data centers in space. That's something that's been talked about. We could talk about solar panels in space. There's all kinds of opportunities there. So there is a lot of super interesting things that could happen and could go right, or even if a couple of those went right, that all of a sudden makes this seem a little bit more reasonable. But you have to ask yourself key questions when you're saying I'm bullish on SpaceX is how large can the space economy really become? Because do we really have demand to sustain space investment forever? Do we have need for it?
Mm-hmm.
We've gotten this far as humanity and really haven't done much with it.
Mm-hmm.
So, and we've done okay, right?
Mm-hmm.
So how much of a benefit for humanity can that be at what cost? The other one, Starlink, that's their baby, right? That's actually doing okay for them. Could that become like critical global infrastructure? Is this something that can roll out to just beyond the rural people in the middle of the countryside who need internet to more? Yeah, maybe this is in big cities. Maybe this is in airports. It's already on some airplanes, which is kind of cool. Mobile internet is pretty cool.
By the way, one of the ball fields I play at has a Starlink.
Do they?
For coaches, because you have no cell reception when you're out there. So they added a Starlink so the concession stand can use credit card transactions, and then all the coaches can jump on to do their game changer and update the scores and stuff. So it's cool to watch.
What Starlink tells me is that there's no excuse to not have high-speed internet in 2026.
Yeah.
It's like $100 a month and $500 up front or something like that, and it's really, really good.
It's nice.
So there you go. Buy some Starlink if you don't have it. The other thing is these people who are bullish on SpaceX continue to have to think, like we talked about, beyond current rockets and satellite to integration of AI with space, and what all of this can become in the future. Again, looking forward, not what it is today. So theoretically, the bull case for Starlink is that this company could become one of the most important infrastructure and communications companies in the world.
Yeah.
Yep.
Right. So that's the bull side.
Did you mention data centers?
Yeah.
And space.
Data centers in
around.
space.
Yeah.
Yes.
Got it.
Which I don't get.
One of the things that data centers, so data centers are more in demand than they ever have been. Artificial intelligence drives a lot of need for data processing.
Mm-hmm.
So we're investing in data centers all around the world.
And they're very controversial.
People don't like them
to put them on land.
They take a lot of space. They take a lot of water. They take a lot of energy. They have cooling problems. So one of Musk's ideas is, what if we put them in space? Because we solve a couple of our problems.
Yeah, there's no clouds.
We can get great solar, and we're closer to the sun. So great solar power. And it's really cold, so we don't have any cooling problems. As long as you can transmit data effectively.
Right.
Can you imagine, though, like server has a problem and you guys send somebody up to reset it?
That sounds expensive.
Unplug it and plug it back in.
Just unplug.
Like that's what they have to
for
do.
10 seconds and plug it back in.
Count to 30, then come back.
Yep.
Mm-hmm.
So those are the reasons that we could have some optimism about this company.
Yep.
Let's get realistic and say there's also potential downside. We have to consider that as well. So the bear case, what could go wrong? Obviously, this sounds pretty risky, right? One of the biggest challenges this company has, as Tony mentioned, is valuation.
Yeah.
It's obscenely valued by any metric ever conceived.
Mm-hmm.
Again, because you're not buying it for today, you're buying it for what it may be in the future. We don't really know that.
Unprofitable company, generating hardly any revenue.
Yeah. And another thing to think about, and this is true not just for this, but true for other investments as well, is just because a company is great, maybe this company is great, does not mean it's a great stock to own, does not mean it's a great investment. Mm-hmm. Things can be a crazy expensive, overvalued, and not good investments, however, be something that is critical to your life and you use it every day and it's a great company. Right. Those are not always the same. This could be that example too. It actually could be a great company, but it could be too hyped, right? So the question might be, at today's price, are we really paying a little too much for the growth that may or may not happen? So the expectations that we need to keep in check of right now are this growth that they're talking about, than we have seen, needs to continue and probably accelerate. Execution among Musk and his entire team must be very strong. They really can't have missteps at this valuation, right? If they get competition, think about companies like, I don't know, Blue Origin. Who's the other one? Virgin Galactic, right? Those are a couple of them. If those actually gain some traction, I mean, and they might be considering it, considering what valuations are for this company. They could say, well, why
get some cash?
I can totally issue some shares and add a better valuation than I'm getting right now. So if competition increases, that could be bad. And investors, if they turn on, if it just becomes out of favor, that obviously can send stocks down. So any disappointment can lead to a lot of volatility there. So just a lot of risk, a lot of growth expectations. But what we need to do is talk about what this means for long-term investing. Because this really isn't just about SpaceX. This is about how we respond to exciting opportunities. And there's exciting opportunities every corner. Right now, it's space and AI, but it was the internet, and it was telecom, and it was tulips.
Railroads.
We talked about those in a long episode.
Absolutely.
Now, for the investor, and that's the question, is should I own it? How much should I own? And those are questions that you're really going to have to talk to your financial advisor about to see your unique situation. But broadly speaking, eventually you may own some of this anyways, as it's integrated into maybe the S&P 500. So if you own an index or something, as this company stabilizes, it may be added into any kind of index. And if you track an index, you're going to own it as well. If you own a broad market fund, this may show up in there. So you may actually indirectly own it over time, naturally. If you want to buy in individually, the biggest question is, how much? And I always say, and this is something we've talked about in other episodes, when there's a high risk like this, where there's a lot of uncertainty around it, you got to be careful not to overinvest and put more than you're willing to risk. If you lose it all, what will that do to your overall outlook and your financial goals? This is one of those where you got to be careful about overexposing. Just because everybody's excited about it doesn't mean you should risk your long-term financial future just to participate in it.
Yeah.
So if you're thinking about investing, not saying you should or you shouldn't, but be careful about how much you put into it. Because again, there's so much volatility and unknown here. It's very concentrated, and that can be a problem.
So I guess you need to think of broader questions to ask when you're looking at investments. So think about, in the past, we talked about some examples of other great IPOs that have turned out to be fantastic investments. The biggest one that comes to mind is NVIDIA. Mm-hmm. When it went public, which was like 30 years ago now, but it was teeny little guy. It's turned out to be pretty good for anyone who got in pretty early. Mm-hmm. And again, there have been issues where there have been things where other companies didn't do well.
Right.
But there are great opportunities from new companies that go public that can create enormous wealth. Mm-hmm. And you know what? I bet the fundamentals of NVIDIA didn't look like they do today. Mm-hmm. They're probably not near as cash flow generative and profitable and all these other things. So great new exciting opportunities can create tremendous wealth over time. But overpaying for those great opportunities in crazy valuations, and I would say this is a crazy valuation example, does not always have to, because if the fundamentals catch up, all bets are off. But it can lead to disappointing returns in the future. That's just like looking at, this is just markets 101. Yep. When markets are more expensive relative to history, returns are probably a little bit lower. Well, when companies get more expensive relative to history or their peers, returns can often disappoint as well. Mm-hmm. It's not always the case, but it can be. So just some things to be concerned about here. And so as someone who manages money, Tony and I manage our portfolios here, you might ask, what are you guys doing about this? The answer is, we're watching it because it's certainly in the news.
Sure.
There's a lot of uncertainties, and there's a lot of reasons why we don't necessarily think it fits what we're doing. Mm-hmm. But that doesn't mean it's not right for everyone to have a little bit of a piece of if they want. And like you said, it's going to slowly be introduced really over the first couple of weeks, and then even the first handful of months into some of the major indices, not at its current weighting in as terms of market cap, right, because not all the shares are available for trading, but at a much smaller rate. But would... My opinion, okay, this is all my opinion.
This is Austin's opinion.
I'm not buying SpaceX.
Okay.
It is a bit stretched in terms of what expectations need to happen to make it be a good investment for me without taking on too much risk.
There you go.
That being said, it is very exciting. Mm-hmm. I want to watch it. I want to understand it. Hey, someday that company could be generating cash like NVIDIA is, and then all of a sudden I might get pretty excited about it.
Yep. Right. If we were still doing our portfolio competition with pretend money,
you could buy it.
I might be interested.
Yeah, that's right.
You know? So
yeah, because ultimately Austin and I we're entrusted to prudently steward wealth that we didn't earn.
Right.
Our clients worked hard for that, and they're trusting us to steward that on our behalf. And so by our valuation metrics, this investment doesn't seem to check the prudent box.
Right.
It checks some boxes.
Exciting box.
Potential, keep it a low part of your overall wealth box. But as far as inclusion into our client portfolios, we're taking a backseat, wait and see.
Yeah.
These publicly traded companies have to report, earnings quarterly.
Yeah.
And these guys don't have earnings.
Mm-hmm.
And so every quarter they're going to have to face up to shareholders and tell them, convince them to stay invested or buy more shares. And we're just going to sit back and watch the story unfold. And if it becomes compelling enough to check that prudent box, we will include that in our client portfolio.
The other wild card is the lockup period. We didn't even talk about this,
6
right?
months, right?
So 6 months from when IPO has happened to forward 6 months. So we're talking December now, is when a lot of the insiders who still have shares are then available to sell their shares into the public. What this does and has done in the past with not all, but some companies has created significant volatility around that time, because if a bunch of new shares become available, that's the market has to soak up that supply
and demand. Yep.
It's supply and demand, and therefore there is often some weakness around that. So that is going to be something to watch. Or it could go the other way and more shares come on and there's more than enough demand for it. So it kind of all depends right now. But Josh, what are your thoughts, closing thoughts, opinions?
It's always fun to watch. I love seeing innovation and new technologies, right? This idea, my kids, we watched the space ship go around the moon and come back in 2 years. It's going to land on the moon. Artemis, yeah. I mean, there's so much fun to this, right? So the cool thing is this is a company participating in something that's exciting.
Yeah.
So it is cool to watch. But again, when it comes to financial planning, the slow, steady approach wins the race in the long run. And that is what we teach our clients, and that is what we do. So
absolutely.
That's where I land on this.
Well, thanks, Tony, for joining us. Josh,
thanks for having me.
Good chat. If you guys found value in our conversation, don't forget to subscribe to the Wealth Mindset Show on whatever podcast platform you're listening to. That way you don't miss any episodes when they drop. Also, visit us at thewealthmindsetshow.com for more resources, for show notes, for all those things. Or if you're ready to check out what we do at Hixon Zerker Capital Management, visit hzcapital.com and check us out on social media. We'd love to connect with you on that. Otherwise, we'll catch up next episode. Have a good one.
Talk to you later.
Bye.
Thank you for joining us at the Wealth Mindset Show, where we tackle the complexities of finance and life planning to help you align your wealth with your values. We hope today's conversation provided value and clarity as you navigate your financial journey. Your hosts work for Hixon Zerker Capital Management, and all opinions expressed by them or any podcast guest are solely their own and do not reflect the opinions of Hixon Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hixon Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment, and any investor attempting to mimic index performance would incur fees and expenses that could reduce returns. Securities investing involves risks, including the potential loss of principal, and there is no assurance that any investment plan or strategy will be successful.